Absolutely. I think, there's a lot of talk about kind of the return of China and how that's going to boost growth this year, and particularly commodity prices. But I think it is very important to be cautious. And as you said, it absolutely will be a bumpy reopening. We've already seen that, I think, over the course of the last couple of weeks with the surge in cases in China, questions around the quality of data that's coming out into the global economy about what the surge is really looking like, and to extrapolate from that how long that surge in cases might last and what it means for consumers there. I think the big concern for economy watchers are what's going to happen with Chinese consumers, and when does personal consumption start to recover? We did see a big hit to incomes in China without the same household stimulus measures, and I think we'd be definitely getting ahead of ourselves to assume that consumption will come right back online. I think we'll see a bumpy reopening, a lot of state-supported growth in the early months of the year, and consumers coming back online much later in 2023 than many expect.
Yeah, but it does help, right? I mean, it is a move perhaps in the right direction, if you want to call it that, especially on a global economic perspective. Do you think it decreases, at the very least, the magnitude of recessions we're likely to see across the year?
Yeah, we don't want to be overly negative, look a gift horse in the mouth. Obviously, China coming back online is good. For the pace of growth and kind of stimulating that demand. I think one of the reasons we're still seeing kind of modest prospects for China this year is the fact that there will still be slower demand elsewhere. So kind of the slower export demand from the US, from Europe, as those economies go through their slowest period of growth in 2023, will it be a dampening factor? And I think that's mainly because 2023 will be the most coordinated, slow year. But at the moment, we're not expecting a global recession, even though some countries in Europe will record year-on-year recession. And others, including the US, we think will kind of stagnate with growth kind of in the very, very marginal positive numbers. But all told, coming out of a severe crisis, pandemic driven, and now a severe inflation driven economic crisis, a year of stagnant growth is actually quite a reasonable outcome, and kind of akin to that soft-ish landing for the global economy a lot of us have been hoping and looking out for.
Cailin, we are preparing for Davos this week. Our colleagues will kick off their coverage later today. And in terms of what's on the agenda, I've been thinking about this dynamic where there are a lot more Western countries going to be there represented this year than in the past. At the G7, there is just Olaf Scholz at the moment, who is scheduled to be there. And so far, for much of 2022, the U.S. and Europe were pretty aligned in terms of their approach to Russia and sanctions there. But it feels as though tensions are brewing between the U.S. and Europe. Europe increasingly concerned about some U.S. policies that have been put into place, namely the subsidies to try to lure investment into the U.S. And there's some concern within Europe that those could be anti-competitive. How do you see that relationship playing out in 2023?
I think we are at a turning point. And again, as you said, 2022 was a crisis year. And if anything, we can pull out a positive story there that the US and Europe kind of came back to the fundamentals. We've been seeing a lot of strain in the relationship prior to that, even under the early days of the Biden administration. Some of that strain was coming from this continued reliance on slightly protectionist policies, looking to boost US manufacturing, tensions in the auto sector, trade more generally. The US and Europe, all the problems were apparent. The war in Ukraine broke out in 2022, and all of a sudden, kind of, we came back to the fundamentals. We saw a strengthening of the security partnership and increased kind of pay into collective security across the board. And everyone was moving and pulling in the same direction for a little while. But as we're coming out of kind of the crux of that initial crisis, all those same primarily economic problems are coming back to the surface. And this is what we'd expect, is that we'd see a temporary pause, if you will, a renewed commitment to the transatlantic relationship. I think that's certainly going to stay. But again, the reality of those economic relationships, what happens on trade, what happens with US investment, especially in critical sectors like semiconductors and others, auto will remain a tension. All these things come back to the fore. They were never really gone, just temporarily off the top of the agenda.